Hello, everybody. My name is Karl Frank, president of A&I Financial Services. It's a pleasure to have you here for our January 2021 investment market outlook. I am pleased to represent our investment committee, and we're going to talk about three big things today. We're going to talk about 2020 in hindsight. We're going to talk about some big themes that we see going forward, some things that I'm excited about, and then we're going to talk about three big investment opportunities that are taking place in today's market. I hope that's what you're looking forward to. That's where we're going right now. A little bit about our firm. We're down to earth and experienced. We're a Colorado firm. We've been around 35 years, and we've got more than 100 years of experience in our investment policy committee. The second thing that I think makes us very unique is that each one of our financial advisors offers an unbiased expert team. So we work with a CPA or an attorney and a banker or an insurance expert or all of the above for our clients' unique financial plans, and they get that initial advice free of charge. The third thing that makes us very unique is a patented investment process. One of our two big research partners has a patent. We combine that patented research alongside of the due diligence work, in-depth due diligence work of our other research partner to provide our clients a unique investment portfolio that we believe is the right way to invest. The fourth thing is that we only work for a small number of successful clients. We are so thankful to have you trust us. If you already are a client, thank you. And if you're not a client, perhaps you'd like to learn a little bit more about how we make these investment decisions. We operate with a spirit of humility and gratitude up and down our firm. I sure hope that you feel that, and we're thankful for you, and I hope you feel thankful to have us along with your journey, on your journey to help you provide your unique financial plan. All right, well, let's dive in. These are the big themes for today. It's very similar to the last quarterly presentation that I gave. We are in better shape than almost anybody believes, but the only thing that matters is what the vast majority of us believe. And right now, it's terrifying. So let's look at 2020. COVID-19 was the big theme of 2020. It's determining how we feel today. It was a complete out-of-the-blue shock. We came into the year thinking it was going to be all about U.S. elections, and we expected some drama over that. But what we got was something completely different. We got massive social unrest in addition, and Black Lives Matter and a lot of other very important movements were affecting not just the U.S., but countries all around the world. And that was a big theme for 2020 that did affect how our portfolios performed. China versus U.S., the trade tensions grew in 2020 dramatically. And that theme is likely to continue, we believe. Additionally, in 2020, equity markets declined faster and deeper than they ever have in history. And of course, they recovered, and in many cases recovered a lot. And it, for many people, turned out to be a good year for investment returns. Finally, trillions of dollars of government spending happened last year. That trend is likely to continue. It's just an amazing, amazing time to be alive. As we enter 2021 and we look at the news that's out there right now, tell a stupid joke. A guy walks into a bar, but the bar is closed. So he goes to the liquor store next door and he looks at the hard liquor and he says, what goes well with the evening news? I mean, these are scary times, right? What's going to make you feel better? Well, let's look at the market barometer. Let's look at where we're at. And this is part of Athena Invest, one of our two big research partners. It's part of their patent. Here on the far side is the behavioral indicators. It's part of their patent. It says things are normal. In fact, it says that small companies are likely to outperform in the future according to their research. And so that's good. The second big category here are the economic indicators, and these are excellent. So both the measures for goods and services that have decades of academic research providing some sort of predictability for future equity returns, they both look good. The third category here, valuation, is poor, and that's not surprising in the aftermath of the COVID-19 pandemic and worldwide economic shutdown, that companies' earnings were slaughtered. So that even if their prices stayed the same, and we know they didn't, they declined and then recovered very quickly, then you would expect the valuation to be poor. You'd expect things to be expensive, but it never before has it been this dramatic. So that's a negative. There's no doubt about it. Based on history, valuations don't look good. And the final category over here, it looks excellent. These are the technical indicators for the market. The trends are up. So all things considered, we're actually in a good place. We just don't feel good. We just don't feel good, do we? So here's our predictions. The three big themes that are going to take place in 2021, we believe, are, COVID-19 will effectively end. We'll show you the reasons why and the research that we rely on for that. The second big theme is that we're going to have more government. And it's not just in the US, but all around the world. And then finally, the trends that began last year or changed last year will continue to strengthen this year and into the future. So what's begun it will continue. The train has left the station and it's got a lot of momentum. Let me take a look at what I'm talking about here. How in the world could I say COVID-19 effectively ends in 2019? Well, we lean on a company called McKinsey & Company. They're a huge research firm. We trust them implicitly. These are some of their predictions, and you can see that what's actually happened is very close to what the base case of what they predicted. In fact, it might be even a little bit better than what they predicted. McKinsey & Company, McKinsey Global researched 800 firms and came up with two big themes that are going on. Two big reasons for confidence at this time are due to a renewed social contract. 22 countries around the world have increased their spending by 20% of their GDP to fight COVID and the economic after effects. In addition, the private sector is offering new protections for their employees. And together combined, some of these will provide a lasting effect for any sort of a future health crisis. So things are looking better here than perhaps what the nightly news and the social media and the other people might say. The trends are good. But this was all spending. And so there's always a downside to spending. In fact, the spending was enormous. In 2019, that was 13% of the global domestic product was spent on COVID and the economic after effects. That's the average across all of these countries. That's a huge number. And the US is right around the average. How much more money will be spent? So this renewed social contract has a price to it. It's not always going to be good. And the other side of that means more government, not just in the US, but let's take a look at China. So in China, at the end of last year, the largest company in the China stock market was Alibaba. And Alibaba was going to spin off its financial services division called Ant Group, A-N-T Group. Well, days before the IPO or the initial public offering, it was shut down by the government. It was shut down by the Commerce Department. It was shut down by the Chinese Central Bank. And it was shut down by the Chinese president himself. Speculation is that it was shut down because of criticism from their founder, Jack Ma. We don't know, of course, what the real reason is, but it's a high coincidence that his criticism just days before that led to the government shutting down the IPO that would have made him even more wealthy. So here's a picture of Jack Ma wondering if perhaps maybe he shouldn't have criticized Mother China. But it's not just China. Not just the bigger government intervention there, but all around the world. This theme is continuing here in the US and in China as the government openly announces lawsuits and anti-competitive measures against some of the major technology companies you see on this list. So government intervention is a big theme, and government is going to get bigger and continue to get bigger over the next few years. And companies are going to find ways to make money in spite of the headwinds which they're facing today. And we can look back at history and we can take some confidence that in the past, these companies have done this, other companies have done this, and they will too. And we will find ways to make money with our investments too. I'm going to show you some of those ideas here real soon. But before we get into the specifics there, let's look at the overall economy. There are a couple of other things that we look at. One of the biggest, of course, is the interest rates. It's hard to find a more recent chart than this. The theme is the same regardless of where you look for the research, in spite of the recent headlines. The Federal Reserve has promised to keep interest rates low well into the future, as much as the Federal Reserve can do that. Now, they're not the only player. There are many other central banks all around the world. They have an effect. There's the federal government, and fiscal policy has a huge effect on interest rates. But the biggest player is the private market. It's buyers and sellers, the big buyers and sellers, like all of us combined, help determine interest rates. We have a change at the U.S. federal government, of course, and now that the Congress is controlled by the Democrats, we may have more spending. But it's not as easy to say, oh, Republicans in charge, they're fiscal conservatives, they'll spend less, versus Democrats in charge, they'll spend more. That hasn't been true for years, and it certainly hasn't been true from an investment standpoint. That's not the risk or the concern that I'm talking about here. What I'm talking about here is that interest rates, as much as they can be controlled, are being controlled by an active Federal Reserve. And they may be acting as a competition to China in order to keep this economy growing. The Federal Reserve, as independent as it is still a victim of its time. And so the current indications are that interest rates will remain low, and that's good for our stock portfolio. The second big concern, or big description, if you will, is the dollar. And the dollar, relative to its recent past, is worth less. Relative to other currencies around the world, the dollar's not going to buy as much. Now, many people out there are propagating that the dollar might go to zero, or this is a bad thing, and please don't buy into those threats. This, just because the dollar is low, it is really just a description, not a prescription for doom. It does not mean that Bitcoin or gold or silver are necessarily going to go up in value. No. It's a description of the times. With low dollars, it means U.S. goods are more competitive all around the world, and it provides a boost to the U.S. economy through these companies. Similarly, our investments that are overseas, valued in other currencies, go up even further in value compared to our own U.S. dollar as it declines. So there are wonderful, powerful things about it. It is a description. It is not a prescription for doom. So don't worry about the dollar. Instead, if you're going to worry about anything, worry about inflation. Inflation's been low for years, but it's predicted to go up. Here's a chart from Morgan Stanley. They're predicting it's going to go up. I could find a number of charts that would show a similar thing. Expectations for higher inflation in the near future are increasing. And in the past, inflation sometimes has skyrocketed. It's been sometimes the case that that's gotten out of control very quickly. Well, never before we had so many active participants with deflationary pressures preventing that. And so we've got these two battling forces, and it's a very dramatic and interesting time. The tumult will continue. Interest rates are low. The dollar is low. Inflation is low. These three things are good. They're good for the economy. A little bit of inflation is actually good. And so if it were to increase, it's not necessarily the end of the world. Our goal is not to try and worry or control any of the things you see here. Our goal is to provide you and our other clients an income that you won't outlive, that grows at a rate that's faster than the cost of the goods and services that we're going to buy every year for the rest of our lives. And so that is the subject for the rest of today's presentation. Let's dive in. We've never lived in a time with more disruptive change than in business than it's going on right now. It's incredible how quickly companies adapted to the COVID-19 world last year. And we believe that the companies that did adapt and who are adapting to the work at home and the delivery of their services and the delivery of the creation of their products, they're going to continue to do well in the future. And so that's a big decision that we're making. There are two big themes going on that McKinsey & Company identified. One is business building, and the second one is the next normal operating procedures. Companies that are doing well are building new businesses. They're finding new ways to adapt in this malleable opportunity and create new markets and go into new markets. It's a very exciting time for the companies who've figured this out. And the second big thing is the new normal operating world with agile processes and nimbler computing and faster and more profitable ways of doing business. This is a great time for companies who can adapt. And so that's the situation that we're entering as we enter 2021. So I want to talk about four big themes, two in the US, two in international space. And these are the ones I'm excited about. This is certainly not all that we're invested in. I won't mention any company names or any mutual funds or anything along those lines, because nothing, of course, that I'm saying here is, a recommendation for you. But these are exciting themes. The one that I'm excited about is network infrastructure modernization. So here in the US, we've got a massive amount of data, and it's growing at an exponential rate. And what's happening is that there's an asymmetric use of that data in the last mile of the network that gets it to us. So people are using data in surprising ways, and it's very hard for the infrastructure that's already in place to accommodate that. So one of our investment managers is very, very excited and believes that there's some huge opportunity for the companies that are building the infrastructure, for the companies that are providing the communications to get it there, and for the apps that run on the network in the last mile. So that's pretty exciting, at least to me. It may or may not be to you. The second one is the automation of the industrial complex. The companies and the industries that built the world, that provided the world economy, some of them are left behind. Some of them, even though we still depend on them, are using old, archaic, outdated technology, and they're very inefficient. There will be new providers of the same services and goods and the shipping and the everything else that gets us the world economy that we have today. And some of the companies will adapt and they will transform their industry and become a lot more profitable than they used to do with better computing, connectivity, and more effective use of data. And these are two exciting themes. The other side of this, I threw out a whole bunch of complicated language and two examples on purpose because we're not sure that the average investor can find these companies. These are not the companies that make the nightly news or the social media or any other sources. That's what makes it exciting. They'll find out about it, we think, later. In the meantime, we think we've got an unexploited opportunity. All right, so let's look international. Here's a couple more themes that I'm very excited about. Now, when we go international and we look for profitability and return on invested capital, there are two big ways we do that. Our investment managers are looking at global themes. Usually these themes are global, right? They're not always, and because the second side of this is sometimes these themes are regional or country specific. So these two themes are global. The two that I show up here that are really easy to understand and exciting are mobile e-commerce, buying stuff on a mobile device. That market is expected to hit 3.5 trillion in 2021. 73% of the purchases outside the US are done mobile. It's an amazing, astonishing number. That gives us a lot of runway. There's a lot of growth there. There's a huge amount of business to be made in the mobile commerce. So that's one of the investment themes from one of our investment managers or more that seem pretty exciting to us. The second one is genomics. Genomics, oh my goodness. The cost to sequence a gene is $600. It's less than $600, and it happens faster than a day. And we are the beneficiaries of it. The COVID vaccine was created incredibly quickly from this technology this year, faster than ever before. And it's an amazing benefit. It also helps cancer and other therapies. We're seeing the genomics theme happen very, very quickly, and it's happening in great part outside the US. This is a very exciting investment theme. We'd love to talk with you about it in more detail, but it's very specific, right? We're certainly not going to bet the house on any of the ideas that I had right here. Like I said, near the beginning of the presentation, we're humble, we're going to remain a little diverse, and we're going to get excited about a couple of things. Okay, so those are four specific themes, but let me talk about the big opportunities. They're right in front of our eyes. The first one is valuation. We believe the right way to invest is to diversify by strategy. So what do I mean by that? Well, you can think about it as two big ways to invest. And there are several. There's 10, actually. But the first is valuation. It's a Warren Buffett style of investing. You buy a company with good earnings at a low price, and you're getting a valuation strategy. Another way to invest is the growth strategy. You see a company that's quickly growing, you expect their growth to continue to go at an exponential rate or whatever the rate might be. And they might have low or negative earnings even, but because you expect great growth, you expect that stock price to go up based off of their future potential earnings. So those are two very different strategies. Recently, it's been the growth strategy that's significantly outperformed value. And in the past, that has flipped. And it flipped dramatically in the year 2000 when the end of the dot-com growth companies declined in value. And that is the same separation between these two types of strategies today. So there's a big valuation opportunity. This is a consensus view. We have held it for a while. We believe that we did benefit from that during this recovery from the COVID crash of 2020. And we expect it to continue. The second big theme, opportunity, if you will, that we have in front of us today is international. You might have guessed it by my prior slides and focus on many things that many of us aren't paying a whole lot of attention to. But international, the reasons that we like it and why we have a little bit more today than maybe we had a while ago are similar to the valuation theme, which is that historically, international investing has delivered great returns. And recently, that has not been the case. So they're on sale. If you can buy two sweaters and one's on sale and they both provide the same utility, if you're like me, you might be buying the one on sale, right? I mean, why not? They're both high quality. So that's the similar story with the valuation and the international. You've got some companies that are on sale, and overseas you've got traditionally high rates of return that have not happened recently that we think might be ahead of us. And so those are two big themes that are right in front of us, very apparent, that we're taking advantage of already in our portfolios. The third big theme that we're taking advantage of today is also right apparent. And this is one of my favorite slides. If you've read any of the Periscopes or listened to the podcast or seen some other videos from the past or read our investment theses, which we publish every quarter, you'll find that we believe right now is a good time to be invested in not the largest companies. Here's an example. In 2005, the 10 largest companies in the world are companies we've all heard of. General Electric, ExxonMobil, Microsoft, Citigroup, British Petroleum, Walmart, Royal Dutch Shell, and Johnson & Johnson, the 10 largest companies in the world in 2005. And you might have held on to them and said, you know what, there's nothing that can go wrong with these companies, nothing that can go, they're so big, they've got so much presence, they're dominating their particular industry. Well, you would have missed out, because 15 years later, only one of them, the Microsoft company, is still in the top 10 companies. 9 out of these 10 are technology firms, some of which you hadn't even heard of before, like the Alibaba or Tencent, companies that might not have even been in existence in 2005, right? The only one that's outside of technology is an oil and gas company outside the US, Saudi Aramco. And the market capitalization of today's largest companies dwarfs all of those other companies put together, are still about the same size as Apple. It's astonishing how much growth there was outside of the largest companies. And that is a trend that repeats and repeats and repeats and repeats. 15 years ago, Amazon sold books. It does a little bit more than that now, and it's on the list. Who is going to be the next company growing like that? Well, we don't know, of course, for sure. But we don't necessarily want to put all of our eggs in the companies that have already experience that growth. Geometric growth eats its own young. You can't grow big rates when you're already big forever. So we want to find small companies. So those are the 3 big obvious themes that are apparent to everybody that we're acting on: the valuation, the international, and a little bit smaller companies than just the big companies that we're all familiar with. The bottom line is where I started. We're in better shape than almost anyone believes, but the only thing that matters is what the vast majority of us believe. We're in a stressful period of time right now. It's best to have a financial advisor to talk to. And for us, it's great to have great research partners who deliver us the facts. And so these are a list of some of our partners. Thank you to McKinsey & Company, Littman Gregory, Athena Invest, Statista, the Wall Street Journal, and other resources for providing this to us. I'm going to end by letting you read the disclosures, but also tell you about them, because these are very true, that past performance is not indicative of future performance. We do invest in spite of that. That we believe that nobody, and us included, of course, can predict market tops or market bottoms or insure us from short-term losses. That this is not specific investment advice. This is instead some of the big themes that we're seeing here. But if you want specific investment advice, please give us a call. Talk to your financial advisor. And we would be happy to share that with you and tell you, what the details are behind the big stories that I just outlined here. And share this in video with your friends. It could be that one of them would benefit from the advice and a quiet conversation with a professional like us. So that concludes the annual investment commentary from A&I Financial Services. The complete document is online on our website. It's available on the blog. It's downloadable. You can get it from your financial advisor. You can read all of this. Until we see each other again, create a beautiful day. Bye-bye.